Hello and welcome to ETBFSI.com. In this special series specifically about FinTechs, we'll try to understand the current state of the FinTechs and what is the way forward. And I have with me Anurag, Jain and Harshvardhan Lunia. Anurag, Harshvardhan, glad to have you.
Thank you, Amal. Thanks for inviting us here.
So let me begin by asking you a very common question to both of you, few common and few specific questions, and try to understand at large level what is the current state of FinTechs. So Harsh, I will start with you.
Sure.
Considering major changes that has happened in the industry on its compliance side, regulation sides, also the innovation has taken to a different level. Many fintechs have already entered into digital lending space.
Correct.
So what is the current state that you see of the digital lenders now, specifically the fintechs?
Yeah, I think very valid question, Amol. I think post-COVID wave 2, we have been seeing that all the incumbents and the new enterprises or new fintechs and startups all are focusing on digitization, right? Prior to COVID, it was running at a small pace, but post-COVID wave 2, everybody is realizing that digital is here and now. Everybody needs to build it to serve the consumers, right? The consumer or the end borrower or consumer is also asking that I want to be digital. I don't want to visit a branch. I don't want to take multiple trips. I don't want to go through kgs of documents to be submitted and everything. So that's happening. And I think during this time, last 12, 18 months, we've seen collaboration word has picked up drastically well. Collaboration is picking up. Now everybody is interested in how things will collaborate, how people can work with each other and finally solve for the consumer. So that's going on. I think the regulator has also picked up a right step in coming out with digital lending guidelines on setting some framework, some thought processes for this collaboration, right, overall, so that incumbents and the new startups can collaborate in a rightful form and fashion and do the rightful activities finally to serve financial inclusion, finally to serve the consumer in a better form and fashion. So that's what is going on.
Okay, noted your points. Anurag, what's your view?
So basically what as what Harsh also mentioned, I think collaboration is a keyword which has been prevalent in the last one or 2 years, and I think that will continue with the DLG coming in. We've gotten some of the guardrails, and so it's like a highway that has been set, right? You have to move on NH8, you can't move out of it. Now, whether you're moving slow, fast on a car, on a bicycle, or on a jet, it doesn't matter, right? But you have to move in that direction. So I think that is good from an industry perspective, because it sets the direction. So directionally, everybody will be moving in the same direction. Now, how each of the fintechs and they have to be sort of dealt with. Maybe that can be taken up on a one-on-one basis. But I think directionally, it's the right step. And while the collaboration will still continue, while some of these fintechs were required to make some changes in their workflow, because of the guidelines and all, I think at least that gray area has been removed, right? At least what you can do and what you can't. So that removes a lot of froth from the market, that removes a lot of uncertainty from the market and gives you that direction, and so that you are able to predict that you'll be able to do a certain level of business in given a period of time, and that at least makes it more predictable.
Sure. So then let's move forward and discuss this topic a bit. So I have been obviously covering this space and seeing a great energy in the fintech space, and it's quite interesting to know the innovation which the fintechs are coming up with. And it started with the fintechs will give a tough competition to banks, they will become bank, which now stopped at a collaboration model itself. But I see obviously the energy level is still very high. But on the business side now, everybody has started talking about the profitability. Everybody has started talking about the compliance. Why did we reach to this level? I'm not saying this is a bad level at all. Obviously, from here onwards, there will be a different growth altogether. But has RBI regulations made a big difference in terms of changing the whole scenario and the mindset of the fintechs? Harsh?
Yeah, so Amol, very valid question. Amol, this has a background in what we've gone through in last 3-4 years per se, right? One could be like we went through demon GST, we had the upheaval overall. Then we all went through one of the largest calamity all of us have seen is COVID, right, overall. And during this time, we have accordingly realized that situations emerge and you have to basically adjust to the circumstances, right, overall. So what's happening on one hand when there is a push on digital, right? On the other hand, overall, people have also started realizing that they cannot just keep on burning money in the name of innovation, right? If innovation is supposed to be there, some outcome of that has to be visible as well, right? And we've seen heard the words of winter coming in, everything, because people are now valuing the money a lot more, right? People just don't want to splurge on innovation in the name of it and no outcome attached or guaranteed to it, right? So the word sustainable business model was always there. But sometimes in the hurry of accelerating innovation, that takes a backseat. But when the circumstances become unconducive, right, then people go back to that same sustainable business, and innovation has to little bit stop at during that time, or innovation has to be done in a sustainable manner again, right? So this is what is happening. And RBI, accordingly, we've almost like digital lending companies, a lot of us have been for 8-9 years, right? That they've allowed us to evolve, they've allowed us freedom to build and everything. Now that we are all turning to a reasonable size and scale, they are also ensuring that there is no systemic risk, right? Finally, if I am a lender, Anurag is a lender, anybody else who does a lending, they finally disburse depositors' money, right? Which is at risk. If the FinTechs don't do, or if the collaboration doesn't work, or the banking partners don't do properly, this what is at risk and which is governed by RBI, or they have to take care of it, right? We've seen multiple instances where things can go wrong and then finally it falls upon the government, exchequer or RBI to look at it. So what is happening is, considering the circumstances, considering that innovation will have to be maintained and balanced overall, and considering that the system is now maturing a little bit overall and the DLG guidelines and all those frameworks are coming in, we are all going through all of this. But this will seem to release, like it will release the wheat from the chaff and everything, and then finally people who are actually building rightful models, have the rightful consumer, rightful product, will survive and sustain. So this happens in every industry and every ecosystem. We are going through just that, Amol.
No, sure. In fact, I still remember when I got into the journalism, people started talking about the consolidation in telecom space.
Yeah.
Back then, nobody believed it, but now there are only three players.
Exactly.
Right? And they are eating the market.
And nobody could agree that in country like India, there could only be 2 or 3 players, but it had to be a consolidated play only, right? Overall.
Look at UPI, right?
Yes.
You don't have a dozen players over there.
No, agree.
And I think one of the reason why the sentiment might have been down for some time is also because both these things have coincided, right? I mean, the funding winter that we are seeing, from a global perspective, right, with the interest rates going up in a way to sort of contain the inflation, and because of that, the money being pulled out of the markets, both private and public markets.
Yeah.
I think that funding pause has come in. I would not say it has stopped permanently, but that funding pause has come in, and also that has coincided with the regulation that have come in from the RBI side. So I think given that both these things have coincided, there might be slightly dampener in the market, but I think overall we do see a very bright future of the entire industry. And as Harsh also mentioned, this will separate the men from the boys, right? So I think if you have a sustainable model, if you're working on your unit economics, and if you're really serious about building a large company, I think you have a chance.
Sure. So, give me more sense here, or explain, maybe you can take a minute or two add here. And why did we land into this situation? Because investors were really, really high and investing and infusing capital very aggressively till last year. Right? During even COVID, we thought that perhaps the rally will, go through a tough time, but that didn't happen. They invested and infused, money left, right, and center. But now suddenly they realized, they should go slow. In fact, I recently spoke to a lot of VCs and angel investors. I did a show, in fact, with them, and everybody said there is a funding winter. So the word that you used, pause, is a very right word. Yeah. They have paused that button. So why did they pause the button? On a lighter note, is it because FinTechs burned so much money drinking coffee and bringing innovation over it?
No, I don't think so. See, I think the right thing would be that India is a new dragon, right? And nobody wants to lose the chance of sort of being a part of the India story, right? And this has happened in multiple other sectors within India, where some of the large investors, they missed the chance to participate in it, and then the industry grew so big that later on, they just regretted not being a part of it. So I think India as a story, everybody knows it's a an awesome story in the next 25 years, and some of the the biggest value creation will happen in India in the next 25 years. In the next,
I'll just add one more point, Amol. What has happened is, since 20, one of the major consumers of VC money, China, is not going through its best time, right? Overall, there is turmoil, public, everything, this and that, dissent for government and everything. a lot of people who had raised money to be deployed there, right, from our LPs, they had either one choice of giving it back to their investors, or they could invest in a new, like Anurag said, dragon, or new economy that's building up, right? So a lot of money which was going over there in hope that a lot of manufacturing, a lot of services, a lot of startups will start focusing over here. And India is a self-sustainable kind of economy, right? We have a self-consuming population and everything. And I think the ecosystem is building up phenomenally well as well, right? If you look at the kind of fintech developments that we have, we are at par among the best in the world overall. Similar in production of goods and everything, now we are there. Services also picking up and all those things are. So that money came in hope that things will work out like China or some few other economies that had gone drastically well in 90s or 200s overall. But then that didn't seem to happen in India that much, right? And I think a lot of people saw those kind of things happening, and few of the investors invested money as well. I'll share a simple anecdote as well. A lot of money that got invested was not actually from VCs. If you look at 2021, a lot of VCs just sat on the sideline and didn't make much of the deals because the deals were not making maybe unit economic sense or prudent sense for them. But a lot of people like hedge fund managers, a lot of people who were wealth managers actually went ahead and did these deals with people who actually could take long-term bets or something like that, right? So we still feel that, and that pool of money came, got invested, and now that pool of money is still not available. So we're feeling the funding winter, but that pool of money was limited pool of money that came, got invested, and now is staying over there. So this was there, and I think everybody of us knows that India's story for a decade is intact, right? So if somebody has a long-term vision, I think they still will be happy about India and everything. So I think it's all generalization, but yeah, we saw exuberance, which is not continuing now, which is part of journey, I think.
2 points.
Yeah.
One is then, will it be very challenging for LSPs, not if the typical NBFCs or who wants to become an NBFC for those companies, because they are simply driven as a platform. That is one part, Harsh. And second is, what is the alternative now? Will LSPs, will they be comfortable working as LSPs? या फिर if they want to survive or remain fintech, they will have to go for an NBFC license. What is your observation here?
So I think Amol, the clear differentiation piece is there are two parts of our business. One part of our business is the experience management, UI, UX, and all those things of data and everything, which is the tech data product part of it. The second part of it is money rotation, right? Giving money, taking it back, collection, credit, analysis, and everything. So I think a lot of institutions, as we talked today in the morning in one of the sessions as well, there is a gap on the first part, tech product data science part. On the second part, we are well-developed economy where credit people, underwriting people, sales people, collection people are well available, and banks are doing the good job, right? So a lot of LSPs are now coming in the space of being service providers, SaaS providers, and everything, and they are doing it and participating with the lending institutions and working together. I think what was happening from a regulator's perspective or consumer's perspective was that the data privacy, data security, who owns the data, whether you get a rightful approval from the borrower or from the lender to get that kind of data, all those things were getting complicated. And some functions were doing by LSP, some functions by the regulated entity, the third parties, the bank is involved and stuff, and different level of regulations. So what has happened is regulator has basically kind of tried to clarify who can be an LSP, what he can do, regulated entity, and those kind of clarifications. Now people will go ahead and pick their sides, whether they want to stay as an LSP or a regulated entity and everything. And the difference is, Amol, the valuation will be different, right? In an NBFC, you get valued at price to book or price to net worth and everything. In a SaaS service provider, you get valued like a SaaS company or multiples of revenue, right? It's very, very different, right? You might have 1,000 crore of revenue in NBFC and might still get valued at 4,000-5,000 crore. And here, if you have 1,000 crore revenue in SaaS company, you might get valued at 30,000-40,000 crore, right? Because the margins are different, earnings are different, and everything's are different. So people will choose their sides. I think this is again a gradual evolvement in the ecosystem, Amol. But I think now good part is clarity is there, and people need to choose their sides, which is important for systemic risk, for regulation, which is important for consumer as well. See, on one side, you and me are consumers as well. We don't want every party to be handling our data, everybody sharing our files and everything, which was critical. That is getting solved in the ecosystem right now, overall.
You want to add something, Anurag?
Yeah. So basically, as Harsh mentioned, on the allocation of responsibilities piece, that is what is being, further strengthened. That okay, fine, as a lender, this is what you should be doing, and this, as an LSP, this is what you should contain yourself in, and everybody will choose their sides. what is also important to understand is that whenever you see an ecosystem, right, there's also a bit of the infrastructure building process, right, which is a very different responsibility altogether, right? So when somebody is in a lending business, for example, on book lending business, right, I think majority of their work is into money management, right? How to raise, how to lend, how to get the that delta made as a profit in between, and and doing all of those things. Somebody has to also focus on building the ecosystem, right? To be able to use the the tech or the latest technologies and improve the customer experience. For example, marketplaces, right? So today when you talk about companies like Book My Show, right? I mean, now nobody even thinks to go anywhere else, right, to be able to buy a movie ticket. Do you? Right? When you talk about e-commerce, you have Flipkart and Amazon, right? You don't go anywhere else to look for buying something, I mean, in general, right? So some of these intermediaries who are there, right, they are building those critical infrastructure, right, and somebody has to pick up that responsibility. So we should not just sideline LSPs as as in ancillary companies, right, who are just doing secondary or menial tasks. I think they're building very, very important infrastructure for the market, right? You're talking about marketplaces through which you have billions of dollars of transactions happening, right? So I'll give you our example, right? When we are we are building the platform infrastructure for trade finance in India, right? And trade finance is like a big field, right? In terms of the volume of transactions that are happening, the sensitivity of the transaction that are happening. We've also gotten the license for ITFS, which is an international trade finance platform, right? So there we'll be doing international transactions through our platform. So the responsibility of these platforms, is huge. Right, you have to build that infrastructure for some of the participants, like the on book guys, to be able to come there and do a transaction over there. And we are not even looking at only Indian counterparties over there, right? You're talking about the foreign institutional investors who will be coming and using that platform to do those transactions. So building those infrastructure, those critical setups and platforms is also a very important piece. And we should not look at it from a binary outcome perspective, right? I mean, if you are not doing lending, you're a zero, or if you're doing lending, you're one. I mean, that is not how we should look at it. There are other critical pieces that have to be picked up by some of these companies, and which are equally important from an infrastructure perspective. Let's say today you have guys who have money to lend, but they don't have places through which they are able to do those transactions, right? So that is equally bad, because you'll then not be able to do anything. So some of these platforms bring those efficiencies, right? Today, when you're talking about a platform which is basically aggregating some of these foreign institutional investors, providing you their infrastructure, and giving you a platform or a market to invest in, I think they are solving a very, very bigger purpose for the entire ecosystem.
I think noted your points, quite meaningful. And I think, obviously non-regulated entities will also make a big difference. Their presence is also...
Software for software creation or infrastructure creation, technology creation, right? See, basically you need cloud and digital infra. Basically you need algos to personalize service and increase the experience and engagement. Thirdly, you finally need a proper borrower connect and all those kind of stuff, right? These software things can be built by only software institutions, right? If a lending institution who's hired tech talent thinks that I will design UI, UX, experience engagement, it's not going to be possible, right? Because all of us want to experience a seamless experience like a Swiggy, Zomato, Amazon, and in financial services as well. That's not going to be happening by all of us, right? It's going to be not going to be easy. So those companies will have their own say. Those companies will have their own area under the sun, right, to survive and grow and everything.
And in fact, unregulated should not be equated to illegal. I mean, I would say that maybe they are not yet regulated, right? There's no chapter today that exists, in the book that talks about those models. But if they are relevant for the market, they are bringing or executing some of the objectives from a government perspective or stakeholder perspective, I think they should be given their due.
Yeah, sure. So let me come with my last question specifically. Let me put both of you in astrologer's shoes. I know it's a little difficult to predict, but given the major challenges that has happened now, whether it's fundraising, whether it's the compliance burden, or whether the the investors are looking for the profitability. given all these aspects, where do you see the fintechs, specifically the digital lenders, maybe in next 3 to 5 years? And I will start with you, Harsh.
Sure. So I think, Amol, if you ask me, the fundamentals of creating a business or running a startup don't change. You need to have a sustainable business with the unit economics and everything, right? If you have a sustainable business with unit economics properly, you will be profitable, you will be able to absorb costs and everything. The second most important thing that all of us as a startups have to do is scale. We've made a mark, right? We've established business models and we are all doing reasonably good. But now to actually serve the ecosystem, serve the society and be a part of ecosystem in a meaningful manner, we need to scale. If we scale, then basically all the problems of costs of compliance, costs of maintenance, costs of all the things will comply, because then that cost becomes minuscule compared to all what you are doing, larger scale of things, right? So next 3 or 5 years, Anurag, Amol, we all will have to build a sustainable business, profitable and everything, which are the key pillars of a fundamental business, any business that you do, whether small, big or large, and scale ourselves to an extent that we become countable and worthy for the consumer, for the regulator and for the ecosystem.
No, sure. Quite meaningful. What about you, Anurag?
So I think, in the next 5 years to a decade, I believe it will be like a hockey stick growth. And the reason why I say this is because if you've noticed in the last couple of years, all the data sources that you need from, a decision-making perspective, most of them have started going online, right? So we started with, let's say, the Ministry of Corporate Affairs data, then, talking about credit bureaus, banking data, and, now GST data based on the consent of the consumer. So all these data sources are now converging, right? What that essentially means is that from a decision-making perspective, everything is now available for you, for the system to be able to take a call. And that subjectivity in the credit underwriting process is going down drastically, right? What that means is, out of those 100% of the transactions, around 70 to 80% of them will go straight through, right? And which is a very, very, favorable scenario from where we are as of today, where majority of decisions have something or the other which is subjective, from a decision-making perspective. So they go into the refer loop, for example, right? So once that starts happening and once all of these data sources are converging, and see, there are a lot of reasons why that is happening. Not only the private innovation that has come in from the startups and fintechs, it's also the effort from the government side, right? To be able to promote that public digital infrastructure that is helping us arrive at that. And once that starts happening, right, the transactions will like zoom. So I don't see it as a linear growth. It will be a hockey stick growth. And I think I'm quite positive about the overall industry in the next couple of years.
No, sure. I mean, no doubt about it. I mean, positivity has to be there, no matter what. So thanks for sharing all the updates about the industry and your
Thanks so much.
Partly future predictions. So thank you, Anurag, and thanks, Harsh, for sharing your inputs.
Thank you for inviting us.
Thank you. And thank you so much for watching ETBFSI.com.